Good afternoon, everyone. It's our finale with RMI Professional Corporation once again. I hope everyone's had a fantastic summer as we hit September, and I'm sure those with little ones are happy it's back to school time. Today, I wanted to talk about a topic that I've been hearing lots about lately, and that's real estate investing. So I get common questions all the time, and should I buy my property personally? Should I buy it through a corporation? What's the right structure? And there's a few things I always consider when deciding this. The first one is the income going to be active versus passive? This is really important, especially when looking at a corporate structure, because your tax rates will be different for the type of activity. So some activities that are considered active income would be if you're actually doing a full build, if you're renovating and doing a full renovation on a house, or if you are doing flips, for example. Those all would be considered active. Another really key one is actually if you're doing short-term rentals. So putting property on Airbnb, for example, that is still considered active income. Passive income, on the other hand, is more long-term rentals or medium-term rentals, so 1 month or longer. And those ones, with those, when you're treating them through a corporation, your tax rates are actually a little bit higher. So it is very important to consider the right structure when moving forward with that. The next consideration that becomes really important is the activity that you're doing in real estate actually taxable from a GST standpoint? So things like short-term rentals, you actually need to be charging GST. There's new rules that have been passed where operators are actually going to take GST if you don't provide your GST numbers to them. So for example, Airbnb would charge your customer GST if you're not actually GST registered. So that's a very important factor as well. If you're doing a build, for example, there's some very complex GST issues that can come into play because you have to do some self-assessments after the property is built. So very important to consider, is your activity that you're doing actually taxable from a GST standpoint, and what gets taxed, so you can have those considerations in mind as well. And then the third one is, should you buy your property personally or should you buy it through a corporation? Now this one, you have to look at the overall picture. What are you doing with real estate investing? How many properties do you want to buy? What's the nature of the activity? But there are some very good corporate structures that can be set up in order to actually achieve long-term goals and minimize your taxes. Once again, it's our finale with RMI Professional Corporation. And if you want any other information, please subscribe to our channel. Thank you and have a great week.